Hello everyone. Welcome to today's daily pitch, 26th of May 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, we will start with our economic calendar. Yesterday it was a US bank holiday, so we had relatively low volume and volatility. Today we don't have important economic data, but we will cover what's going on with the markets, what are we expecting to see for oil and gold as well. So let's start. Okay, so as mentioned, the economic calendar is relatively calm. We had the Bank of Japan core CPI, which came in higher than forecast, expected due to the higher oil prices. Let's move on to the charts and see what is going on. Of course, during the weekend, we had a lot of headlines related to the ongoing geopolitical tensions in the Middle East. In general, the markets absorbed these as optimistic, that we're expecting to see a deal between the US and Iran, and that's why looking at the dollar index, we can see that it opened with a gap down. As for the US Treasury yields as well, similar, opened with a gap down because lower oil prices. And for the VIX, or what is known as the fear index, we are seeing it currently at the 16 with no major new fear or escalations in the market. Starting with Brent, let's go to Brent and see what is going on. Looking at Brent prices, that what I was mentioning, that we opened with the gap from 99 to the 96, $3 gap, and currently the price is reacting here. But at the same time, a deal is not reached. That's why we are seeing the oil prices moving up. In addition to that, yesterday we had a headline that there was some strikes from the US on Iran and a little bit of tensions back to the table. So the pressure from the geopolitical tensions in the Middle East is still not over yet. There is no deal being reached, just some optimistic headlines bringing some market volatility, but I believe the fundamentals are still the same. That's why looking at oil prices, the first scenario I will be looking for is the following. In case we go back down, let's zoom in a little bit. In case we go back down to the 93.5 to 93 and we reject this level, I will be looking for the following price action. My next area I will be watching, of course, is the gap. Okay, the next area I will be watching here is the 96.5. I will be looking for the price action in case I see that the fundamentals are still supporting the tensions in the Middle East and we are able to break higher, retest. My next target will be the 99.5, or in other words, closing the market gap. This is the next scenario I will be looking for on oil, and let's mark this zone as well. Not a major, but a minor zone. Whenever we're talking about major zones, we are talking about this one, for example, where several times price rejected. This one that we reacted at the 93.5, 93.3. So I will be looking for these two zones. On the other hand, what if we have any economic headline, any headlines saying that there will be a deal between the US and Iran, and more optimistic headlines? In case we broke above this level, breaking below the 92.93, retesting, my next target will be these candle lows here, and I will be adjusting this area of interest slightly higher to the 87.5. Let's move it a little bit. So that's it on oil. To be honest, I don't want to put a lot of areas of interest, especially that it is heavily affected not by the fundamentals but by the headlines related to the geopolitical tensions in the Middle East. Sometimes one headline could bring a huge amount of volume. 1 minute candle could be like several dollars on oil or hundreds of pips. That's why you should be very careful. Let's move on to gold and see what was our previous analysis, what is happening, and what do we expect. During our last analysis, we were here in the middle of the range. We said that we would like to see a retest of the 4,580. The candle wicks slightly touched this level, so either you should have an entry, manual entry at the 79.78, or in case you had a limit, I'm not sure it will be activated, but it is what it is. Let's delete these lines. The same areas of interest are still being respected. So scenario number one, I will be looking for the following. I will be marking this zone as well here and looking for the following. Scenario number one, in case price is moving down and retesting the 4,500, I will monitor the price action here in order to see if we will have a rejection similar to this one, or just a break like this, and my next target will be the 4,460. This is my first scenario on gold. My next scenario, what if the price action start flipping and it retests the 4,540 to 50? In this case, let's zoom in a little bit to the lower time frame. In this case, I will be looking for the following price action, something like this, and a move down. This is my second scenario on gold, and the final scenario, what if we broke below these candle lows? Going back to the 1 hour time frame, in case we are able to break below the 4,450, my next area of interest I will be looking for is the 4,400 and a little bit deeper. Why I'm saying a little bit deeper? Because as you can see here, a lot of candles are having wick and price is digging a little bit lower. But it's very important to see an intraday candle breaking and closing below this level, the next candle making an upper wick and respecting these candle lows, and then my target will be at the 4,380. The final scenario, which I will be looking for, what if we rejected from here and we retested once again the 4,580. In this case, we can add the following scenario. So very simple, guys, couple of areas of interest. To be honest, I am currently looking at this move in case the price action is flipping, retesting the 4,550 to 40, showing some signs of rejection, and then in this case my first target will be the 4,500 flat, and then later we will see how the price action will be moving, what is the volume and volatility, and what are the headlines especially related to the Middle East. So guys, that's it for our episode for today. Quick overall market view and analysis. Hopefully you enjoyed it. If you like our content, don't forget to leave us a like, follow and subscribe, and we will see you soon in a new analysis session. Thank you so much for joining.